Welcome to the Mulcahy Law Firm podcast. For over 25 years, Mulcahy Law Firm has helped plan communities and condominium associations throughout the state of Arizona. Please go to iTunes or your favorite podcasting platform and leave us a rating and a review. Thank you for listening. Here's Beth Mulcahy.
Hi, everybody. Good morning. I'm going to give a few minutes to attendees to enter the Zoom and get settled here. Welcome to class number 3 of our 2025 virtual HOA and Condo Academy in partnership with the cities of Avondale, Chandler, Glendale, Goodyear, Mesa, Peoria, Phoenix, Scottsdale, Surprise, and Tempe. My name is Beth Mulcahy, and I'm the founder and senior partner of the Mulcahy Law Firm in Phoenix, Arizona. I hope that everybody had a great St. Patrick's Day yesterday. I know that I had my green beer and was really happy to be celebrating with family and friends. As you may know, I have represented HOAs and condominiums in the state of Arizona for over 28 years. My firm currently represents over 1,000 planned communities and condominiums in the state of Arizona. And I also currently serve on my board, my HOA board, and have for many years. So I think I bring a wealth of information to these free classes that we teach to provide education to board members, managers, and homeowners who are thirsty for more information about how to run their associations better. In today's class, we're going to discuss a number of different topics, most of them pertaining to like the financials of the association. And so the first topic we're going to be discussing is the role of reserve funds and then insurance in associations. And we'll be covering best practices for reserve studies, how to fund your reserves, the different types of insurance that you should have for an association, whether you're a condominium or a planned community, making insurance claims and addressing the challenges of rising premiums or just being completely dropped by your insurance company and not being able to get insurance from them anymore. We're also going to be providing today some strategies on how to avoid fraud and embezzlement in an association. Give you some tips to walk away from today that will help your associations to make sure that you're making good decisions and have safeguards in place so that never happens to your association. Okay, so we're going to get started this morning with a poll. Before we dive into this seminar, I'd like to start off by getting a feel for who's here with us today, so I can tailor the information to best serve all of you. So our first question is, which city do you reside in? And we list a number of the different cities. I want to ask as many people as possible to participate today because I know these cities, it's really important for them to get the feedback, who's attending from which city and if their numbers are higher or lower. Our second question is, let us know your current role. Are you a board member? Are you a community manager? Are you an interested homeowner or in the other category? But if you're joining us now on Facebook Live, just go ahead and put it in the comment section, which city you live in and what your current role is. Okay, while we're waiting for those poll results to come out, I want to give just a quick update on the pending legislation in Arizona. So some of you who've been listening to our classes since January probably know that the Arizona legislature is in session. It is a seasonal legislature, which means it's not in session all 12 months of the year. And I would say we're about midway through the legislative session right now. There have been a number of bills pertaining to HOAs and condominiums introduced this year. And we are monitoring all of these bills. To date, there are no bills, to the best of my knowledge, that have been passed by both the House and the Senate and signed by our governor. We have a great cheat sheet that is a quick update on the pending legislation that we will be sharing with you during this class today. You also can find that cheat sheet on the homepage of our website, and we are updating that cheat sheet twice a month, typically right before we have our first Fridays, and then again today when we do our Neighborhood Services Virtual HOA Academy. So I encourage you to take a look at the pending legislation cheat sheet. There are over 20 bills that have been introduced pertaining to associations. Like any year prior, a lot of these bills are having further regulation for associations, making it honestly more difficult for associations to boards to serve their communities as a board member. A lot of additional requirements and restrictions that are being placed on board members. I know for sure there's 5 bills that have already passed in the Senate and are moving to the House. And we have a number of bills that have passed in the House and are moving to the Senate. It looks like about 5 there as well. So please stay tuned on the new legislation. We won't be talking about some of these bills until they move a little bit further along in the process because lots of times the language of the bills changes And sometimes the bills don't move forward, so we don't want to waste valuable time in our class today talking about it. But if you're interested in what bills are pending and what future restrictions might be coming down the pike, please look at the cheat sheet that we'll be sharing with you in this class today on the new legislation. Okay, let's get right into our main topic for today, which is reserve funds for community associations. Reserve funds is a topic that is a very popular topic for associations, especially because of a lot of the deferred maintenance that many associations are facing right now in their associations. And so before we do that, though, I forgot, we got to go back to our poll results. So first things first, we have over 175 attendees today on Zoom, which is amazing. And 125 of you responded to the poll, which I really appreciate. So with regard to which cities are represented here today, we have 2% from Avondale, 8% from Chandler, 2% from Glendale, 6% from Goodyear, 32% from Mesa, 6% from Peoria, 6% from Phoenix, 15% from Scottsdale, 6% from Surprise, and 7% from Tempe. So really every city that is part of this Neighborhood Services Virtual HOA Academy has residents here that are participating today. So welcome to all of you. And next, what is your role in the association? So we have 61% are board members, 10% are community managers, and 28% are interested homeowners, with the follow-up of 2% in the other category. So we have a little bit higher representation of interested homeowners today, which is great. Welcome. Some of you interested homeowners may have already been on the board once, right? Or maybe you've never been on the board and you just live in your community and you're interested in finding more about how to effectively and legally run your association. So welcome to everybody. Okay, let's dig into our topic for today. We're going to be talking about reserve funds and the role of reserve funds in an association. So just a couple introductory remarks. Currently, Arizona law does not require a developer or an association to create and fund reserves in an HOA or a condominium. However, some association documents may require this. So you want to check your association documents to see what your documents state. I would say on average, most of the associations that we work with do not have that language in their documents. Maybe like 15, 20% do. Planning and having adequate reserve funding is really the best financial tool that an association, or it's in the association's best interest to do this. Reserve funding allows an association to provide for the repair, maintenance, and replacement of the association assets as the community ages. So let's start out with what exactly is a reserve study. A reserve study is a budgeting guide that's going to provide a comprehensive plan that shows an association how much is reasonable to place in a reserve for a specific replacement or a maintenance project. When properly executed, it can give a clear picture for the maintenance, repair, or replacement of association assets for the life of the association. So how does a reserve study typically start? It's usually kind of a thick document, about this thick. Usually it's about 25, 30 pages. And it starts with an accurate inventory of the community's assets to determine the useful life of said assets. And a review of the association's documents also is done to determine the responsibilities of the association regarding property and assets. So let's take, for example, let's say an association, let's give some examples of things that would be part of the reserve study. So the association's pool, the association's clubhouse, the association's maybe you have tennis courts, maybe you have pickleball courts, maybe you have shuffleball courts, maybe you have a beach volleyball area, maybe you have a green belt that is part of your common areas. It's really, again, just any of your common areas that, would typically be listed in the reserve study. And when you get the reserve study, the first thing that the study does is it gives you a list of all the different inventory of the community's assets. A reserve study should also provide, in addition to that, the location of the assets in the community, the current age of each asset, and the remaining life of each asset. And it creates kind of like a timeline for a scheduled repair, maintenance, or replacement for that particular item. And it also talks about the cost to replace each asset when necessary, the cost of repair or maintenance, like painting of association fences, and a calculation of the monthly contribution that the association should be making to have proper funding for the repair, maintenance, or replacement of each item when needed. So that sounds complicated, but really it's not. So associations, if you're in the market to get a reserve study or you want to update your current reserve study, we usually recommend updates about every 3 to 5 years because of inflation. Basically, you just get this document and it's a planning tool. That's the most important thing for you to know. And it looks complicated, but it's really not. The most important page in the entire document or pages are going to be like the 30-year plan for how much money needs to be going into the reserve study each year. And so they make it really simple for you in that it'll say like year 2025, and it'll say what you actually have in your reserve right now, and then what you should have. And then it'll give you a number that you should be placing in that reserve this year to try to build up your reserve so that you can be like 75, 80% funded, so that when these items come up for repair, replacement, et cetera, that you have the money in the reserve to do it and you don't have to do a special assessment. So again, when I'm looking at a reserve study for an association, and this is included for mine, I'm on 2 boards right now for different properties that I own. What I'm doing is I look at the reserve study. I may fan through the whole thing for a few minutes, right? Just make sure that they got all of our assets listed, et cetera. And then I really look for the page that is like the 30-year plan that shows how much money we should have in there each year. And it's just a guide. It makes it very simple for the association. So if you look at year 2025 and it says basically how much you have in there right now in your reserve account, and then how much you should have to be fully funded. And then it gives you a plan for how much money you should put away this year to eventually reach, a plan of having enough money in your reserve based upon the items that are coming up, for replacement or whatever. And so let's just give an example. Let's say that the number that you need to put away this year, like I know for my association, we put away $30,000 every month for our reserve account. And we do that pursuant to our reserve study, which we hired an independent company that has special licenses and training to do reserve studies. And so what you want to do is look at the number that they're suggesting you put away in that year and then divide it by 12 and then try to put that amount of money in there each month during the year. So you divide it up on a monthly basis. Okay, what are the reasons for establishing a reserve fund? Educated homeowners may not invest in a community that has not maintained, the community that has debt, or does not have an adequate reserve fund. Why? Because you don't want to buy a property in an association that doesn't have a reserve fund or isn't fully funded in their reserve, unless you're going into it with your eyes wide open that, hey, I'm going to have to pay in here very soon to pay for all this deferred maintenance that's happening. And that's going to be in the form of a special assessment. So most educated homebuyers are looking for an association that is run professionally and that has a planning tool like a reserve study and has mapped out how to fix items in your aging communities in a way that is over a number of years and there's proper planning, and it's not that things get so bad that the city's shutting things down or you're having to close amenities because you can't repair them or replace them. That's obviously a sign of a lot of dysfunction in your association. So, also when you see a lot of special assessments, it also, to me, is a warning sign that the board didn't do proper planning on their reserves. And because of that, now whoever's the owner is going to have to pay their portion of whatever it's going to cost to fix the items that have had such severe deferred maintenance. Lenders also take notice of whether or not the association has proper funding in the reserve. Now, how does that come into play? Like if somebody is buying a property in your association and they are trying to get lending from different lenders, the lenders may not approve mortgage applications in communities with no reserve or low reserves. And so that means that buyer who you thought was going to be able to buy your property is now not able to buy the property because their lender won't lend them the money because the association doesn't have an adequate reserve fund. Now, why is that happening? It's happening because the lender knows that this particular owner is going to have to pay in a lot of money to make sure that that deferred maintenance is taken care of. And that owner may not have the resources to pay that special assessment and could lose their property in a trustee sale. And that's a risk for the lender. So We do see that from time to time, especially with government-backed loans. Important to note that Arizona, surprisingly, does not require reserves or a reserve study. So you're not required to have a reserve bank account in Arizona. You're also not required to have a reserve study done by a professional. This is something that I think Arizona's behind the times on, because anyone who is in the know in the industry will have the opinion that having a reserve account, a separate reserve account for your reserves, and having a reserve study done to show you the plan for how much money you should have in your reserve account is best practices for an association. And I really wish that our legislature would take some actions to, make that a requirement so that associations would really look carefully into funding reserves and having a separate reserve account. Now, even though Arizona doesn't require a reserve account or a reserve study to be done, there are certain ways that the Arizona legislature has become involved in reserves in HOAs and condominiums. And one of those ways is that if you're an association, whether you're a condo or planned community, and you have 50 or more lots, the association has to disclose to purchasers the amount of money that's held in reserves, and also provide a copy of the most recent reserve study, if there is one, in the disclosure statement that they provide to the buyer at the time that the escrow, the sale of property escrow opens. And that's pursuant to ARS 33-1806 if you're a planned community, and ARS 33-1260 if you're a condominium. And so even though there's no requirement under Arizona law to have the reserve or the reserve study, if you do have a reserve account or a reserve study, you are required, if the association has 50 or more lots or units, the association is going to be required to provide that information to a buyer. Now, if you're an association with 49 or fewer lots or units, the owner is going to be required, under Arizona law, to provide that to the buyer. So no matter how many lots you have in your association, either the owner, if it's 49 or fewer lots, or the association, if it's 50 or more lots, has to provide the information regarding how much is in the reserve and give a copy of the reserve study if the association has one to buyers. Okay, switching gears here. What are some common reasons for maintaining a reserve fund? So basically, we've kind of gone through some of these, but I think this is just a good reminder, is that reserve funding is going to meet legal, fiduciary, and professional requirements to run the association like a business, right? We can't be running a large HOA or a small HOA or large or small condominium if we're not planning for the future, right? We can't just let maintenance fall by the wayside. So having a reserve fund and having a proper planning tool, a reserve study, is best practices and a part of your fiduciary duty to the association. Reserve funding also provides for the planned replacement of major items, which are always expensive. And so some associations that we represent in Arizona have like a lake that's part of the association. And those are huge expense for associations, can be multi-million dollars to repair lakes, especially if there's problems with the lakes. The reserve fund also distributes the contributions of old owners and new owners. And so by that, I mean that it's not just whoever's stuck as an owner when the big special assessment comes up, right? Which is what happens when there isn't enough reserve funds. But instead, it's more equality in that every owner is paying along the way for every year that they're living in the association, paying into the reserve savings, so that when an item needs to be replaced or repaired, it is going to be, you'll have the funding to do it. So it spreads it out more equally among the owners for the time that they are the owners in the association. It doesn't just fall on a brand new owner who may just be buying a home for the first time, and they just happen to purchase this home, and the next thing they know, they've got an $18,000 special assessment to repair the pool and the pool decking and the entire clubhouse. A reserve fund also minimizes or negates the need for special assessments. And a reserve fund enhances real estate values because associations must disclose that information, as we talked about earlier, about their reserve and whether or not they have a reserve study done, to any potential buyers. Okay, so how does the association determine an adequate reserve fund? So a question that I get often is, we've heard in the industry that if we have 3 times the amount of income that we get in assessments on a monthly basis, that's enough for our reserves. That is not a good rule of thumb. Really, having a reserve study done by a professional credentialed reserve specialist is the best way to determine what is adequate in your reserve fund. And so once that reserve study is completed and implemented, the association can plan for efficient payment of major expenses, and it offers a fair distribution of payment responsibility over the life of the community. Okay, so common question I get is, what does a reserve study cost? So it really just depends on how large your association and how many amenities you have. But I've seen reserve studies that have been as low as like $1,000 and as high as $6,000 for really large associations with a lot of amenities. You certainly can contact reserve companies and get a bid from them. And if anybody needs the name of reserve companies, we're happy to give out a list of credentialed reserve study companies if you email me at bmulcahy@mulcahylawfirm.com. Okay, typically what we will say is the do-it-yourself reserve study kits that you'll see on the internet or whatever, those aren't the best reserve studies to use because you may miss something in terms of what assets you have. Also, I don't know what formulas they're using to project the future expenses on things. Also, be careful. Sometimes, like the developer may have created their own reserve at the time of transition to homeowner control. And, we stick with using a professional credentialed reserve company because those numbers may not be actually accurate. They may be just doing it to check a box, and it may not actually be in the best interest of the association. It might be severely underfunded because traditionally the developer has a responsibility to leave adequate reserves in the reserve account. And so there might be an incentive there to lowball what type of needs the association has for the reserve study. So again, really important, use the professional licensed credentialed companies. And if anybody needs any lists, please feel free to reach out to me and we'll give you a list of names of reserve companies that prepare reserve studies in Arizona. What should not be included in a reserve study? This is kind of an interesting thing. It'd be budgeting for assets that would have an estimated useful life equal to or greater than the community itself are typically excluded from reserve funding. Sometimes an example of this would be like elevators, electrical wiring, also some insignificant expenses that are covered by a general maintenance fund. Sometimes are excluded. Natural disasters or accidents are typically insured and are not included in the reserve funding. Now, I'm going to deviate a little bit from that, saying that I own a property in an association that has an elevator, and it is very expensive to replace elevators. We're looking at almost $2.5 million to replace 2 elevators. So I would encourage you, you have some say when you're hiring a reserve company. You definitely have some say in what you want included in the reserve. And if they don't reserve study, if they aren't including the elevator, I would encourage you to do that because that's a huge expenditure. And I think it's smart to include it, even though sometimes they won't because elevators typically last, for many years, sometimes more than 30 years. Okay, we have a great cheat sheet on reserve studies and reserves, which we are going to be sharing for you. For some of you who may be joining us for the first time today, our firm has a plethora of cheat sheets on different topics pertaining to associations. You can find all of them on our website at mulcahylawfirm.com. Just go to our publications tab. We have given out hundreds of thousands of these cheat sheets. We have currently about 65 cheat sheets on relevant topics to HOAs, condominiums, board members, homeowners, really any aspect of the law in Arizona or any aspect of running your association in Arizona is going to be covered in one of those 65 cheat sheets. And we do update those every year, so it has the most recent information in every cheat sheet that's listed on our website. Okay, let's switch gears and talk a little bit about our second topic today, which is insurance and protecting the association and the board of directors through insurance. I want to start out by saying that insurance has been a very hot topic in our office recently. We are getting a lot of questions from associations, whether they're planned communities or condominiums, about, hey, our insurance premium went up so much that we can't afford it anymore. Or We received notice from our insurance company that they are no longer going to insure us. Or our insurance company just provided us notice that they're no longer writing policies in Arizona. And these are all difficult situations and urgent situations because typically the notice of non-renewal comes 60 days before the policy is going to be come due again. And so if you're in that situation where you're in a pickle on the insurance for your association, please reach out to our firm right away. There are some companies that are writing policies in Arizona that maybe have not been writing them, like forever, like some of these larger national companies. We can give you a list of companies that are currently writing policies in Arizona at reasonable rates. We also can talk a little bit about what do your documents state? What kind of insurance are you mandatory to have? You might be able to get by with less insurance than what you had before based upon what your documents state. Or you may be thinking about amending your documents to shift the insurance responsibility to the owners. Typically, that can't be done on the association's common areas, but so there's definitely a strategy. If you're one of these associations that can't afford the premium or your insurance has been canceled or your insurance company isn't writing policies anymore in Arizona and you need some advice on where to look, please reach out to me at B. Mulcahy at Mulcahy Law Firm, and we can help you find some solutions. Okay, let's do kind of just a quick little insurance overview. Basically, why do we carry insurance for associations? It's really to prevent the coverage gaps that become obvious typically after something bad happens in an association. But we have insurance to protect the corporate entity, the association. And so what would be some examples of things that we would need to have insurance for? So let's give our first example, which is directors and officers insurance. So a D&O policy is kind of the slang for it, or E&O in emissions, or directors and officers policies. This will typically cover the board of directors. And common complaints that are filed in a lawsuit against a board would be the board didn't adhere to governing documents or state law. Maybe challenges regarding powers that were given in the association's documents. Maybe they're saying the board can't do something. Breach of fiduciary duty, so not living up to your duty of care, duty of confidentiality, duty to avoid conflicts of interest. Maybe there was an architectural issue where the architectural committee disapproved something or approved something and somebody's upset about it. Fair housing complaints. Maybe an owner feels that they're being discriminated against based upon the actions of the board. And so basically all of those examples are times where the board, somebody in the association is going to say, an owner will say, I'm going to sue the board for whatever. Like I just went through the whole thing: breach of contract, negligence, breach of fiduciary responsibilities, bad decisions by the architectural committee or board. The type of insurance that covers board members if a lawsuit is filed against the association is called directors and officers, D&O or E&O insurance. And basically that is a premium that the association pays annually to protect the board for the decision-making that they're making for the association. And I personally would never serve on a board, HOA or condo board, unless the association had D&O insurance, because I want to make sure that the association board is going to represent me and cover my costs for any legal representation that's needed in the event that I'm named as a defendant in a lawsuit as a board member in my nonprofit association that I live in. And so again, directors and officers insurance, it's mandatory in my opinion. Associations should have that. How much is enough? I mean, it really just depends. We see most associations are getting about $1 million. If you're a larger association, you might be getting 5 or 10 million. And you want to talk with your legal counsel about how much is enough, or also with your insurance agent. So that's the first type of insurance that associations need to carry is D&O insurance to cover their board members in the event that the board members are sued for whatever issue an owner may have against the association and the board members. The other kind of insurance, the other kinds of insurance are going to be like a property insurance policy. Property damage claims are more common typically than D&O claims. And so it's not uncommon for boards to set insured loss caps intentionally, sometimes to reduce their premiums, but also sometimes the boards don't know how much their community is worth. And so guaranteed coverage replacement cost is sort of hard to find today. However, most policies do have an automatic inflation increase in building costs. So if there's damage to your building or something, most policies already have like an inflationary, increase that's built into it. Something that your board may want to do is have your community periodically appraised and reviewed to be sure that our association's policy has enough insurance to cover what the cost would be to replace things. And you also need to think about adding coverage for any additions or improvements that are made after the existing policy was issued. So, what are some types of claims that are made on a property damage claim? The ones that we typically will see will be, let's say that maybe there's a common area pipe in a condominium that, bursts and it is supposed to be maintained for the association and it causes a lot of damage to the common areas and other units. That's typically going to be a claim that's made on the association's policy. Under the general liability policy, there also could be like a trip and fall in your community. And an owner falls on a raised sidewalk or a resident falls on a raised sidewalk and gets injured, and now they're suing the association, and that's going to be a claim that will be made under the property insurance for the association. We saw maybe in the past, we saw some claims for hailstorms where the roof was damaged in a condominium. That's another time that we've seen property insurance come into play. Fires, whether they occur in the association common areas or maybe they start in a unit and then they extend to a common area. These are all types of claims that may be made on the association's policy. A couple tips or pointers on property insurance claims: act promptly. Same thing on D&O claims and fidelity claims, which we're going to talk about next. As soon as an incident happens, we need to be in touch with the attorney for the association and with the insurance agent to talk about whether this is a triggering event where we need to notify the insurance company. So let's give an example. Let's say that under the D&O policy, the board, receives a letter in the mail from an owner saying, I'm going to sue the board because. Anytime an owner puts it in writing that, hey, we're going to file a lawsuit against the association, it triggers something that requires us to at least notify our insurance carrier of a possible claim that's going to be made against the association. And there's typically a notice provision in your insurance policy that requires you to notify the insurance company as soon as you're aware of a claim that may be made on the policy. On the property insurance side, really important, as soon as an event happens, to be in touch with the agent and your attorney to determine whether or not this is something that should be a claim on our policy. An evaluation will need to be made like, hey, if the deductible is $5,000 and the damage is only $4,000, we may not want to make a claim on the policy because it doesn't make business sense. We're paying more than the damage to pay the deductible. And also you just want to get on the damage right away whenever it happens, or somebody trips and falls in the common area and we get a letter from the owner or from an attorney representing the owner. That's definitely going to be something we need to notify the insurance company of right away. Okay, let's flip gears and talk a little bit about fidelity insurance. Now, no one really ever thinks about fidelity insurance until there's been some sort of embezzlement or fraud that's happening in your association. And then you're desperately looking to the policy. How much coverage do we have for fidelity insurance? So fidelity insurance is issued in the association's name, typically. And what it is it just protects the association in the event that there's theft or fraud of association funds. Where we've seen this come into play previously is maybe like the property manager steals money from the association, a board member steals money from the association. And we're going to be talking about this kind of in the second half of the presentation here, but that is something that happens, and it happens pretty regularly in associations. And so having adequate fidelity insurance is really important. I know that I have seen some associations in the 28 years that I've been practicing in this area where maybe somebody's stealing money from the association, and let's say it's $150,000. And we go and look at the insurance policy and it shows that, we only have X amount of dollars in fidelity insurance, like 10 grand. So we didn't have enough. And so kind of what I'm thinking as you're looking at your fidelity insurance coverage, talk to your agent and talk about what is sufficient. If probably what I would say is, okay, look at how much money is in your general checking account at any one time. And that's kind of a good indicator that, okay, if somebody was going to steal the money, how much money do we have in our checking account at any one time? The sad thing is that usually when people are stealing money from an association, it's like a trickle. They steal money over a long period of time. And so one little tip that I would give any association that is willing to listen is get as much fidelity insurance as you can. It usually doesn't add that much cost to the premium. And when you need it, you need it. And I know a couple of associations that had some major claims where a manager stole a lot of money from the association, over $500,000. And we were very pleasantly surprised when there was $1 million of fidelity coverage for the association under their fidelity insurance policy. Okay, how much is enough? We kind of talked a little bit about this on the fidelity, and a little on D&O and a little bit on the property insurance. First, check your association's documents to ensure that you have the required coverage. You may want to talk with your attorney and also with the insurance agent, have them look at the documents too. Also, get some advice from your trusted advisors, your management company, your attorney, when you're going through the renewal process, just to make sure that you are getting enough insurance. Maybe it's time to think about an appraisal for your community when you're looking at how much property insurance you want to obtain, and is that enough? Shopping for insurance, really difficult right now to be shopping for insurance because there are so many companies that are not writing policies in Arizona. Basically, you try to get two bids at a minimum. If you can. If you can't, I have some clients right now that can only get one bid because of the position that their association's in. Maybe they've had a lot of claims, or maybe they're kind of a higher risk association because of where they're located in Arizona. Again, you can contact our office to get a list of the names of insurance companies that may be able to help you in Arizona as a starting point if you're in the market to find new insurance. What are some areas that I think you should watch closely on insurance? Okay, a couple things: deductibles and claims. Whenever you're making a claim under any of these insurance policies, it's a good idea to talk with your attorney and your insurance agent. Who pays the deductible should be evaluated on a case-by-case basis. So, for example, if we have an owner who has a grease fire in their kitchen and it causes damage to that unit and, the association's common areas and maybe two other units, if the association has to make a claim on its policy, typically what will happen is that the deductible will be paid by the owner because they were the person that caused the fire. Some other things: workers' compensation would be some other problem areas. Many boards overlook this coverage, assuming that they only need it if the community employs workers directly. But anyone who has independent contractors even on their payroll may still be vulnerable to claims. So if the person that you're hiring isn't licensed, bonded, and insured, they could be treated as a direct employee of your association, even though you don't consider them a direct employee because you're not withholding taxes, etc. I had a really good example of this many years ago in a situation where the association hired a roofing company to come out to the property. It was kind of like a one-man shop and repair roofs. And the person was not licensed, bonded, or insured. And they did it to save money. And then what ultimately happened is this person fell off the roof and was seriously injured and made a claim against the association for workers' compensation. And we never considered this person as an employee, but the association ended up having to pay a substantial amount of money, like over $80,000, to pay the hospital bills for this unlicensed, unbonded, and uninsured person that they had working on their property. So you got to be really careful on that. You may need to be getting workers' compensation policy if you are hiring people like that, which we really do not encourage associations to do. Also, if you have any direct employees, where you're like withholding taxes when you're making their payment of their wages, you definitely would need to have workers' compensation insurance. Okay, some insurance tips just to kind of close out this topic. Some quick ones would be: know the contract dates for the insurance policies. and make sure that they're renewed on time. It should be on a master calendar for the association. You should be discussing the renewal 60 days in advance of the renewal becoming due, because you don't want what common thing that we hear is that a management company will contact the association and say, your policy wasn't renewed, and we're just letting you know that, and we only have a week now to get coverage. I mean, you should know as decision makers for your community that 60 days in advance of that renewal, there will be notice that's given to the association as to whether or not the policy is going to be renewed or not renewed. And at that time is the time that if it's being renewed, you may want to go shopping, pricing, to see if you can find a better policy, cheaper policy, more coverage, less coverage, whatever, higher deductible, lower deductible. That 60-day window is game time to be making those decisions. So having in your mind that maybe the president and the treasurer especially should be keeping track of this. When is our insurance due? And then backtracking at 60 days, there should be discussions going on during that policy. Another thing to think about is research to determine if your insurer is on solid financial ground. Each insurance company has a rating, so you want to be careful that you're using an insurance company with a high rating. Because if they have a lower rating, they might be at risk of going out of business. Read the master policy and insurance provisions in your associations to make sure that you're getting the right coverage that you're required to have for your association. Be proactive about risk management. The best way to reduce the premium costs is to limit the number of claims that you have for your association. So how do you limit the claims? Just be aware, identify risks and reducing risks when possible. If you get a complaint about a sidewalk that is raised and people are tripping on it, get a maintenance person out there right away to fix that. Sometimes you'll have somebody that's threatening to sue you. And in that case, maybe get your association's attorney involved right away to see what sort of damage control we can do to make the situation better so that we're not going to have a lawsuit. Sometimes lawsuits are unavoidable. But in my experience, many times, if you're proactive on the front end and talk with your attorney, you have a high probability of being able to resolve the issue with the homeowner without having to have a lawsuit and therefore a claim on your insurance policy. Eliminate and control possible risks by having property inspections, maybe annually or semi-annually, depending on how large your association is. Make sure that you are doing proper maintenance in your association. You're using employee training and have enough resident education about why associations are doing certain things. The board needs to follow governing documents and be aware of state laws and treat this like a business. And attending these classes is obviously wonderful. The 60% of you who are here today are board members. You are doing things that are limiting your potential insurance exposure by becoming knowledgeable about this particular area of the law so you can do a better job for your communities. Even with insurance coverage in place, be proactive. You may want to shop the insurance every couple of years to make sure that you're paying a rate that's consistent with the industry. When you're changing carriers or agents, ask the agents to certify the new policy coverage in writing. This should be an apples to apples comparison between what you have right now and what you're changing to, just so that you make sure that the change that you're making is a good decision. Have a claims management procedure, like all claims that are made. How do we handle them? If there's a water damage claim, a fire claim, who is the first person that was contacted on it? Does the board have to vote to send it to the insurance agent and the attorney, or can the manager go right to them and just keep the board informed? Talking about all this in advance is a great idea so that when the claim does actually happen, we have a plan in place. For condominium owners, educate owners about the importance of having their own policies for their contents, or maybe it's more if the insurance policy only covers to bare walls. Making sure that you're having an open dialogue with the owners about what type of insurance they should have so that there's no gaps in coverage when there's a serious claim in the association. We're also going to be sharing with you just our cheat sheet on, insurance that we have put out there. It's a great little summary of everything that we've discussed here today, and you can share that with your board. We also have some other articles, that we're going to be sharing with you here today. One is from a finance article about insurers are dropping HOAs and it's threatening the condo market. Community Associations Institute has an advocacy blog navigating the insurance crisis. And then, of course, our website, we have a number of articles that we've written and other classes that we've taught on insurance problems and how to handle them. So I would encourage you to look to our website too. Okay, we're going on to our third topic for today, and we are right on time. I am really happy about that because I usually go a little bit late. So glad that we're right on time today. Our third topic is kind of a scary topic. It's on preventing fraud and embezzlement in associations. And, I think if you Googled right now, HOA and condo fraud, embezzlement, and you hit search, I think you'd be shocked to find out how many examples there are of this happening in Arizona. And, in my career, I would say probably at least once a year, maybe more, I will have some sort of questioning from a client about we think somebody stole money from our association and what do we do next? And so today, what I want to do is just spend a little bit of time at the end talking about what are some tips for preventing fraud and theft of association funds so that for any of you that are listening here today, you can set things up in your association so that this never happens to you. Okay, so let's talk a little bit about what exactly, is theft of association funds. Basically, a couple things. I want to talk a little bit about perceived opportunity because I've done some research on this over the years. And when I was a very young attorney back in, like the early 2000s, 1999 range, 1998, 1999, I wrote a law review article on, theft and embezzlement of funds and also on keeping common areas safe and free from crime. And one of the things that in my research for that I found was there was a criminologist who is an expert on why do people steal? Why do people take money from corporations and others? And they created this theory of a fraud triangle. And I think it's really interesting to talk about because there are three sides of a triangle in order to have fraud happen. The first one is rationalization. Second one is social pressure. And the third one is perceived opportunities. So two of the legs of the triangle are kind of hard for an association to manage. And that's going to be rationalization and social pressure. So rationalization is going to be like, I feel I'm underpaid for, being a homeowner, a board member in my association, right? We get paid nothing. Or maybe the manager and I'm spending all this time and I'm getting nothing, and I feel I should be compensated as a rationalization. Or maybe the manager says, I have so many properties and I am not making enough money to pay my bills. And this is so unfair. I'm at 3 night meetings a week or whatever. That's a rationalization in their mind to steal, right? We can't control that. We also can't control social pressure. Like maybe the person has a gambling problem or a drinking problem, or they're going through a divorce and they have a lot of debt and they don't have enough money to pay it. Those two parts of the triangle, most boards won't even know. They won't know what the person's thinking and they won't know about the social pressures that person is facing. However, the third part of the triangle, which is perceived opportunities, that can be managed by an association through risk management and being aware and implementing things in your community that would not allow the person who may have a desire to steal the money from the association. They won't be able to because you have the association's funds so carefully locked down and there's no opportunity to steal the money because it's so carefully planned that they have no access to the money. Okay, so talked about the triangle. The one thing we can do is manage the perceived opportunities. Okay, so let's talk a little bit about what does misappropriation of funds look like? So what are the types of things that we see in our industry when we see someone stealing money from an association? It's outright taking of cash, maybe petty cash. They get $1,000 of petty cash every quarter, and they just dig into the petty cash and start going out for hamburgers or beers or whatever. They just take the cash. There's no paper trail as to how the money was used. Okay, faked expenses. Somebody submitting a receipt saying I paid for this, and this is an association expense, and I want to be reimbursed. Maybe non-existent employees or former employees still being paid on the payroll. Transferring of association funds to another community. This seems strange, but maybe they're making a transfer to another community, or maybe another community's bills are being paid by the association, your association. Use of association funds as collateral on personal loans. The manager knows your bank account. They know how much money is in the account. Maybe they're filling out an application to get a loan and they pop that bank account on as, oh yeah, that's my money. Very concerning. And that would be if the manager's name was on the account, which the manager's name should never be on the account. The account should always be in the name of the association, and that couldn't be done. Maybe falsifying investments on the financial statements, or falsifying that we have certificates of deposits that don't exist, or falsifying bank statements showing that money's there, but it's actually not there. A manager paying personal bills with association funds is another example of misappropriation of funds. Okay, so those are the most common examples that we see. So what are the warning signs that if you're sitting on your board right now that you should be raising big red flags to you? Okay, missing bank statements and reconciliations. So you cannot, as a board member, see the actual bank statement, or you miss certain months. That doesn't make sense. Every month you should have a copy of the bank statements in your board packet. General ledgers that don't balance, or you're not getting the financials of the association for months on end. Those are all big warning signs. Why are you not seeing the financials? Even if you don't have a board meeting, you should still be seeing the financials of your association every single month. Missing and altered documents, giving you photocopies rather than originals, unexplained cash shortages, biggest red flag out there. Overdrafts in your checking account, the manager coming to you at the last minute in a panic. We need you to sign this check for $7,000 because if you don't, pay this, we're going to be overdrawn, or we need to transfer money quickly because we don't have enough money in our bank account. All of these things should be warning signs to you that something isn't smelling right. Some other examples would be increased past due accounts, duplicate payments to vendors, unexplained overdrafts and other bank charges, unauthorized purchase transactions, payments for unspecified services, payments of personal expenses with credit card for the association. All of these things are warning signs of potential fraud. So now that I've adequately scared you about what misappropriation looks like and what are some warning signs, if I had to guess, probably some of you are like, oh, we have this at our association. Probably more than half, if I had to guess, are seeing some of these things at your association. So accounting checks and balances are the answer here, but vigilance and awareness is also very important. Okay, so I'm going to give you some advice on what are some checks and balances that we can put into place. But we need everybody on the board to be vigilant and aware. Obviously, the treasurer and the president are going to be more involved in the day-to-day affairs of the association, but all board members should be looking at all of these things that we're talking about on a monthly basis. That is your fiduciary responsibility to the association, in my opinion. And you can't just check out on the finances because you think the treasurer is handling them. I used to be the president of my association. I used to be the treasurer of my association. I'm now just a director at large on two HOA boards that I own properties in. And I look at the financials as carefully or more carefully than I did when I was president and treasurer. And so we'll talk a little bit about like what a board member should do every month, and talk about, basically like how do I approach the financials when they come in the board packet. And so I can give you just a quick summary right now of what I do. So as just a general director at large, I look at the board packet the night before the meeting, and I look at all of it. I look at the delinquency list very carefully. I look at, and if there's a high delinquency list, I ask the manager, what are we doing to collect the money? Is this file at the attorney yet? I look at the financial statement for the association. Is it consistent with the financial statement last month? For our association, we had $3.1 million in there, I think, as of February. It should be going up a little because I don't remember, having any large expenditures for capital improvements in the past month. Asking to see a copy of the CDs that maybe our association has. Those should all be listed in the board packet as to when they're expiring, how much money is in there. The actual bank statement for the checking account for the association, that should be in there. I'm looking for, are there any unusual wire transfers or transfer to other accounts, I look at every check that the copy is in there and make sure that the check names, look legit. I make sure that the checks are signed by true directors in our association. We do not allow our manager to sign checks alone. Two directors have to sign every check that leaves our association. And so basically, I'm just kind of looking through everything. Anything that would be weird, that would kind of raise curiosity to me, would be a lot of overdraft charges, maybe transfers in and out of the bank accounts that they shouldn't be happening. There really should be no transfers in and out of the bank accounts. Those type of things, low balances when I know that there should be more money in there, high number of delinquencies. These are all things that would be worrying me. Okay, so a couple things that are some checks and balances that we can have in place if you are serving on your board is have a dream team of professional advisors. So the dream team that you need is going to be your attorney, somebody who's well-versed in Arizona law pertaining to associations is very important. Having a relationship with your insurance agent, also really important, so that when you have a claim, you can call them and they don't 1-800 you. Having a CPA that you know, and if you pick up the phone, they will answer your call. And also having a reserve specialist that helps you with reserve planning for your association. Another really important key advisor is your management company. You want to make sure that they have a good reputation in the industry, that they have no history of any fraud or embezzlement by any of their employees, that they carry the adequate licenses and educational certificates so that they're well-versed in managing communities. And you want to make sure that, they have adequate insurance in case something happens where one of their employees should steal money from the association. Okay, what are some steps, checks and balances steps that you can do now to protect your association to make sure that this doesn't happen to you? So be aware, vigilant, and take control are kind of the three things that are theme going into these 11 suggestions. So first, make sure all association records are up to date. Do not let your management company or your treasurer fall behind on preparing financial statements, budgets, monthly board packets, providing you with copies of the bank statements, etc. Number 2, assign control of the reserve funds to the entire board and not one person and not the management company, not the manager, not the management company, not one board member. Everybody on the board should be on the reserve. Why? Because that's typically where you have all of your money, right? It's your long-term savings plan for future capital improvements. And many associations have a lot of money in their reserves. So the only way the money should be able to be taken out of that is through meeting minutes where the board authorizes to have that money transferred out, and the board would have to approve that, and that needs to be sent to the bank to get those monies out. If you leave the control of the reserve funds in one person, that is a risk. Monthly financial reports should be prepared and made available for board review every single month with the balance sheet, statement of revenues and expenses, and a comparison of actual revenues and expenditures to budgeted amounts. I take a lot of heat for saying this, but I'm going to say it anyways. Require 2 signatures, including at least one board member, on all checks or transfers greater than a pre-designated amount. A lot of management companies do not like it when I say that, but otherwise, you're just giving them check writing authority, and there's nobody watching the bank accounts for the association. Very important, I think, to have 2 signatures, hopefully by 2 board members, at least a minimum of 1 board member with maybe the management company on all checks or transfers greater than a certain amount. Maybe regular monthly bills can be paid, but anything over, let's say, $2,500 or $5,000 need to have the signature of at least 1 board member and the manager, or 2 board members. And prior to signing checks, the check signer should review the invoices and the supporting documentation. I cannot tell you how many times in 28 years I have seen one association A paying the bills of association Z, and they don't even know it, right? And so when you sign the check, make sure you're flipping it over and looking at the backup documentation. The management company should be attaching the bill, and the amount on the bill should match the check. There shouldn't be any late fees. There shouldn't be any past due balances, and it should be a bill for your association. Review bank statements and reconciliations on a monthly basis. Keep only a small amount of petty cash on hand and in a secure place, and have a procedure for keeping track of the petty cash so that the money isn't just disappearing. So there should be like a ledger, and there should be an accounting of it every quarter to make sure that the expenditure is an association expenditure, et cetera. And shouldn't be putting $5,000 in petty cash is not smart. It should be smaller amounts. Regularly review delinquent receivable balances. A common thing that can be done is maybe there's money that's owed to the association and it's on the books as still being owed, but really the vendor's already paid that, but maybe somebody took that money and siphoned it off and embezzled it. So looking at those delinquent balances and finding out what the status is an important tool. Number 9, we talked about this before, make sure you have enough fidelity insurance for your association to cover, the volunteers and employees who handle funds. In addition, arrange for directors and officers coverage in the event the board is accused of financial mismanagement. Number 10, hire a CPA to conduct an annual review, audit, or compilation as required by Arizona law. Now, mind you, you only have to hire a CPA for the audit if your association's documents require it, but best practices would be to have an audit done of the books records every year if you can afford it, or at a minimum have a third-party bookkeeper do a review of compilation. That's a third-party bookkeeper not associated with the board or the management company that can do an independent review. Okay, last but not least, if your board discovers that funds are missing or you feel something's not right, reach out to your trusted advisors. Typically, that's going to be your attorney, and ask them what they think. And then come up with a plan. If it's determined, yes, this is an issue, I agree, we should remove the suspected fraudster from a position of control, take away, any access to cash they have or checkbooks or whatever, put a stop on all bank account activity, notify your insurance carrier, check with your association attorney every step of the way on how to proceed. Okay, we have a great cheat sheet on preventing fraud and theft in an association, which our firm is going to be sharing with you now. And you can find that also on our website at mulcahylawfirm.com under our cheat sheets. Okay, gosh, we had a lot of people here today. We're at the end of our presentation of the 3 topics we're going to talk about today. Thanks everybody for being here. We have about 24 questions right now, and I'm just going to go right into the question and answer part of our class today. Okay, our first question is it good practice to request a copy of the property management firm's cyber liability and data breach policies? Is it important to show our HOA as an additional insured? Great questions. So yes, I think usually the cyber liability and the data breach policy is, packaged in with the policies, but you want to ask, can I please see a copy of your declaration sheet for the association company? If you can have the association listed as an additional insured, I would recommend that as well. Okay, next question. Are there any legal requirements for an HOA board that they must take for use of part or all of the reserve funds? Example, a vote of all owners to approve the expenditure. It really depends on what your association documents say. Sometimes documents will say anytime the board's going to spend more than 50 grand or 5 grand or 100 grand, they have to get a vote of the membership. So that's unusual. I would say maybe like 15% of associations have a provision like that in their documents. Otherwise, if you don't have a provision like that, the board can just vote at a regular open board meeting to, move forward using reserve funds to handle certain reserve items. Okay, question 3. Can an HOA completely ban homeowners from renting their homes in its community? So we have a great cheat sheet on this topic called Amending CC&Rs and Implementing Rental Restrictions. Your question is kind of a loaded question because I don't know what your association's documents say about rentals. It is difficult in light of a recent case that was decided in Arizona for an association that may not have had any restrictions on rentals previously to implement restrictions such as you can't rent anymore on existing owners based upon this particular case. So what I would say is, can it be done? I have seen it done previously, but I think that we need to look at this new case that was decided a couple of years ago, look at your association's documents, You may be one of those associations where you no longer have the right to do that because it would be something that wasn't foreseeable. And in those cases, what we may want to do is just implement that so it's only for new owners who are moving in to the association after that amendment is recorded. So there's ways to do it, but it's kind of a complicated question without seeing all of your association's documents. Okay, question number 4. Our community members have requested a special meeting. The board president decided to use the same date as the regular meeting and plans to use her agenda, bringing in a speaker. We have requested it to be a membership meeting, not a board. What can we do? Well, a couple things. Okay, so if you requested to have a special meeting of the membership, technically the board is still running the meeting. If you wanted to have a separate meeting that wasn't a special meeting of the membership, which you are entitled to do under Arizona law and use the association common areas, it's not classified as a special meeting of the membership where the association is sending out, notice to the membership, not less than 10 days in advance of the meeting, etc. So there's kind of a difference in that. One's a formal approach and one's an informal approach. If you are doing it the formal approach way, the board has control of that meeting and they can, yes, owners will be allowed to talk during that meeting, but the board is going to be setting that agenda unless when you gave the notice request that there was a specific agenda that you wanted to have addressed, then they would have to add that to whatever they wanted to address. If it's an informal meeting, you're more in control of everything and you're allowed to have it on the common areas. So hopefully that helps to answer your question. Question number 5. During a recent discussion of a petition for a variance from the architectural guidelines in the executive session, a board member stated that people should do what they want as long as it doesn't hurt anyone. What are some of the issues for the association as a business with this approach? I think as a board member, you're required to uphold the association's documents. So if your documents say you can't do something, you should not be allowing that. If you want to change that, you should be amending the documents to change it. So I think we have to be really careful as board members when we make a statement like that we might be potentially breaching our fiduciary duty to the corporation if we're not following state law or not following the association's guidelines or CCNRs or other documents. Okay, question number 6. We would also like to ask your view on House Bill 2442, which is currently pending in the Arizona legislature. With the language in the bill, or will the language in the bill prevent an association from using reserve funds allocated to specific assets in the study for other purposes? For example, if our reserve study provides for $2,100 for replacement of electrical panels in 2025, would we be restricted from using those funds instead for something different? Okay, so House Bill 2440 is, still on the House floor. It is in a special CO action as of 3/12. Honestly, this one's not moving that fast. So, any bill that's likely to have a chance to pass this year, it really would need to be passed in either the House or the Senate already by now. And so it's still undergoing amendments. So I'm kind of thinking this one is probably not going to take off, but some of the things and these bills, language changes from day to day. So as of right now, my information is that it would prohibit associations from passing a special assessment or obtaining a loan for extraordinary or unanticipated expenses and using a regular assessment or a loan for unanticipated expenses. Any proposed budget, including critical expenses that have risen more than the CPI, would require ratification by the owners and amendment of the budget to meet the owners' changing priorities under the penalty of removal. So, there are some different budget parts to this bill that are making it more difficult for associations to do things without a vote of the majority of the members. And it's not a good bill, in my opinion. So I don't think it's going anywhere this year, but we'll have to wait and see. Okay, question number 7. We have submitted a petition to recall our HOA president. Our documents do not require cause, but we think it's best to let homeowners know why. We aren't lawyers, so we plan to write up facts about performance. Any advice? So I would recommend that you look at our top 10 cheat sheet, and number 6 on that top 10 cheat sheet, we're going to be sharing that with you here. You can find it on our website at mulcahylawfirm.com. It outlines the procedure for removal of a director from office. Okay, so what are some suggestions if you're planning on putting information out there about why you think the president should be removed? be really careful what you say, because if you say anything that is false, you potentially have a defamation claim against you by the president. So stick to the facts. That's probably the most important thing that I can tell you, and make sure whatever you're saying is true. Okay. And honestly, just to back it up even further, please try to reach out to the board to discuss these issues before you go the route of a removal petition, because removals are very expensive for associations. I mean, you're looking at costing the association somewhere between 5 and 10, maybe even up to $20,000, depending on how contentious the removal petition is in legal fees. And that is money that you don't budget for. And it's just out the door. And it creates a lot of division in the communities. The realtors start to get wind that, oh, there's problems on this board and there's problems in this community. There's a recall meeting going. It's just not good. So it's really a last resort thing that I would recommend. Try to talk with key people on your board to resolve the issues if you can. Okay, question number 8. I've heard you say in one of your talks from a while back that you recommend having the treasurer of the association write the HOA checks rather than the management company. Would you please share the reasons for this view? Okay, yes, I've already talked about this during today's presentation. I think over a certain dollar amount, and I think that the checks of the association should be signed by at least one board member, if you can, two. My association, every check that's written for the association is signed by 2 directors. Why? Because we're looking at the backup material. We're making sure that this bill is for our community. We're making sure we're paying the right amount. No one is going to care about the money of the association more than the board members, because they're also members of the community and we know how little money we have. And so it takes away that opportunity leg in the triangle. If we are now the only people that can sign checks. Okay, next question, number 9. We currently pay our assessments quarterly. Some homeowners have requested to pay monthly. How can we allow them to be monthly without them incurring late charges? Really, there's no way around it. If your documents call for quarterly payments and they choose to pay, a payment plan over those 3 months, they will incur a late fee at the end of the first month or whatever, the 15th of the first month, because they haven't paid in full. Okay, number 10, what does a healthy relationship between a title company and an HOA board consist of? A title company, really, we only see their involvement when there's a sale of the property in the association. And so, it should be very businesslike. There shouldn't be any issues. I can't really think of any time that there have been issues between the board and the title company. Title companies are very professional. They basically are just handling the sale of a property. So there really shouldn't be any issues. I guess the only thing I can think of is maybe if the title company is refusing to make an owner or a buyer pay for some debt that's owed to the association, you may want to get the association involved to help navigate that. But for the most part, everything should be arm's length, professional, business-like. Okay, question number 11. We are having our annual meeting this week. I thought this was the meeting where the members of the community could state their concerns at the microphone and get answers from the board. I was told that this is a members meeting and the board just listens. What meeting allows the board to answer concerns? Really, the board, it's kind of a fine balance between the board being able to get their business done at regular meetings, regular meetings that are monthly, and annual meetings and special meetings of the membership, and making sure that the owners feel heard and responded to. So here's what I recommend. What meeting allows it? I hope that your board is being responsive and answering questions, but they can't let those questions hijack the entire meeting. So there's a balance. The board isn't required to answer every single question that comes up at every single meeting. If there's a large number of people that have a large number of questions, the board needs to know that, hey, there's some problems here in the information chain because people aren't understanding or they're not getting the information. Maybe you want to have a special town hall meeting where all the board does is answer questions of the owners. So, to a certain degree, the board is doing short answers to questions that may come up at a board meeting or short answers to questions that may come up in an annual meeting. If you need more of a deep dive, the board needs to be thinking about why are these people wanting so much more information? They should be getting it from the minutes or from communications that we're sending out. Maybe the board isn't doing a good enough job communicating is what I'm thinking. And we need to have a town hall to clear up any things that people need answers on. Otherwise, this is going to go spiral into a removal meeting, which nobody wants. Okay, question number 12. I own a condo unit in a single-story building, 4 units to a building. I'm interested in putting up solar panels to help offset my usage on the section of the roof exclusively over my unit. I understand that Arizona has a law on the books preventing HOAs from outright disallowing solar panel installations. But how does that apply if the unit owner does not own the unit's roof? Does the HOA reserve the right to refuse a solar installation for a unit if the association owns and maintains a roof? Each unit has its own SRP meter. The association does not have any current or future plans for a community-wide solar installation and does not have the funds to do so, even if they want. Okay, so we have a cheat sheet on solar panels, which I'm going to encourage you to take a look at. In a planned community, an association, cannot effectively, but you live in a condo and the roof probably, I'm guessing, is going to be maintained by the association and is not part of the legal description of your unit. And so sometimes in those situations where there's, a roof and there's 4 units in your building, associations that are condos are not allowing it because it's their property, the association's property, and they void the roof warranty, etc. So I have seen it work in some condominium associations, so it can be done, but more likely than not, they're probably going to say no. But reach out to them, talk about your ideas. If you're paying for it, you may have to indemnify them. If there's any problem with the roof, it's going to be more difficult to get them to do this, and they're not, required under that same law to allow this because they own the property. Okay, question 13. Is additional insurance required to cover community EV charging stations installed by APS? What I would do on that is I would talk to your insurance agent and see what their position is on that. It's possible they may require additional insurance. It's also possible they may say you have plenty of coverage, don't worry about it. Okay, question 14. Our HOA is 40 years old. One amenity that was offered way back when a racquetball was a racquetball court, but it has not been used in years and is in serious disrepair. We're trying to figure out what to do with it, but the board thinks we cannot tear it down because it is listed as an amenity in our 40-year-old CC&Rs. Do you think it would be an option, expensive I'm sure, to remove it? I think that your board needs to reach out to their legal counsel and talk about this because this is a change of use, likely because you're going to either remove it or maybe put in pickleball courts or something like that. And you likely will need to amend your CC&Rs to do that. But I think it can be done, but it's going to take a little bit of planning and likely a voting membership. Okay, question number 15. At our February meeting, a board member moved to increase the monthly HOA to $25, which was seconded and approved by a 3-2 vote. We are in process of removing 2 board members. Once those 2 board members are removed, can the remaining board members make second and vote on a motion to rescind the monthly HOA increase? So I have to see your documents in terms of how they're set up and whether or not this increase was legal in the first place. But generally speaking, yes, once the new board is in control, they certainly would have the right to reverse this. But I would seek legal counsel before you do that because I haven't seen your documents. Make sure that you're doing it properly. Okay, question 16. If the developer is still in control of the HOA, is the D&O insurance paid for by the residents covering the developer and property manager appropriate? If the developer is serving as a board member, and it sounds maybe like the property manager might be a board member too, based upon how you worded this, yes, typically the D&O insurance, if they're serving as board members, will be covered by the association's funds. The director or the developer will have their own insurance for their developer responsibilities. But for the responsibilities as a board member, yes, they will likely have D&O coverage for that. We have a great cheat sheet on transition from developer to homeowner control that I would encourage you to take a peek at since you're right in that alley right now while your developer is still in control of your association. Okay, question 17. Are homeowners able to request copies of the association's insurance policy? Yes, absolutely. Just make a records request and the association is required to provide that to you. Question 18. Currently, trash cans, campers, and trailers on public roads are enforced per our CC&Rs. However, given 33-1818 and the amendment in 2023, our HOAs whose declarations recorded after unable to continue enforcing what is in their documents. So we have a great blog on this topic pertaining to the different laws that have been passed about planned communities, which have, streets that are dedicated to the public or dedicated to a city, county, municipality, and whether or not the association can continue enforcing what is in their documents. So if you're an association that falls into one of those categories that after 2025, your CCNRs are recorded after that date, I believe it was 2015. I'd have to go back and check because I don't have the statute right in front of me, but 2015 appears to be correct. You would not be able to enforce on-street parking if the streets are dedicated to the public and your planned community. So I'm not sure where you are in this, and I'm not sure if your association, had CCNRs that were recorded before this date or not, but this is a complicated topic. Take a look at our blog on this. Question number 19. I bought a unit of a townhome within a community and found that the HOA didn't have insurance, and thus I could not get a loan. Can I sue the board of directors for not placing insurance? Okay, so it sounds like you're an owner in a community and you're unable to get a loan because there isn't insurance. I don't know if this is like a supplemental loan or like a HELOC or something. And I don't know if the board really doesn't have insurance or they have minimum insurance or what's going on here. So it's kind of hard for me to raise that issue. If they violated their CCNRs and they're supposed to have that insurance, it's possible you may have a claim. Okay, next question. Number 20. If an event occurs with the HOA where they act in a way that brings a lawsuit, but the policy that was active during the time of the breach has just expired, does the new policy handle the claim or the old insurance that was active during the breach? It really just depends on how the policy is written. Some are claims-based and some are occurrence-based. So I have to see your documents to determine. As long as there's no gap in coverage, it should be covered by one or the other. Okay, question number 21. My CCNRs require a 2/3 vote to change insurance to bare walls. What are my options if I don't get the 2/3 vote? I don't know what your current insurance situation is, but I'm guessing that you're wanting to go to bare walls to make the policy, cost less. I mean, I guess you can play with the deductibles. That's certainly something that you can do. I'd have to see your CCNRs to give you, more information about what your options are. If I play with the deductibles, I mean, like have a higher deductible amount to lower the premium type thing. But you definitely need legal advice if you're in this situation right now. Okay, question number 22. How can I determine the rating of my or other insurance companies? Where is that information available? You should just be able to Google that pretty quickly. If you can't find it right away, you can contact the insurance company and ask them specifically what the rating is, or your insurance agent should be able to give that to you very quickly. Question number 23, looks like we're up to 29 questions now. In our long-range planning document, road maintenance every 2 years and possible reconstruction after 14 years is included. The board voted to increase annual dues within the amount allowed in the CCNRs to avoid a special assessment to pay for road work and inflation in the monthly costs of the community. Should the funds collected for the road work be kept in a separate account from the inflation costs being incurred? We currently have the funds in one reserve account. Okay, so you increase your annual dues and you want to have this money go into the road work account that you have for your association. I don't think it needs to be in a separate reserve account unless you voted that it was going to be that way, but just you can keep track of it in the reserve account and indicate you can have a subcategory in your financials stating that there's a subcategory for the roads. I think would probably be the best way to do it. Check with your CPA. They may have some other ideas. Okay, question number 24. Do you anticipate in the future HOA community managers will be required to hold active Arizona real estate license as commercial property managers are required to hold? No, I don't. I think that there is very strong lobbying by the management companies to not be required to have any licensing in Arizona. And there are very rarely bills that are introduced like that. And when they are introduced, they're, quickly shot down. So based upon my experience of watching the legislature for 30 years, I don't think that is in the near future for sure. Okay, question number 25. Our prior board, in place for approximately 5 years due to apathy, did not adequately manage the community nor the property management company. Monthly assessments were not increased while massive insurance increases took effect, and a water leak was let go for months, accruing massive water bills. We have a new board in place and switched property management companies, but we want to recover some of those funds. What recourse does the new board have? If we go after the old board, do we risk the insurance claim? We'll raise our rates further at the renewal. Yes, this is a problem because if you sue the former board, you're basically suing the association because they will have insurance coverage under the D&O policy and it'll be a claim on the association's insurance policy. So it's really not smart to do this because it'll ultimately end up increasing your premium, maybe even more than you might get from a claim like this. So, I mean, unless there is really like fraud or something like that wouldn't be covered by the insurance, or the amount is so high that this is our only option, we have to do it. Other than that, I would say wouldn't normally advise you to do that, to sue the former board members. Okay, question number 26. We are 7 associations and are self-managed. We currently do not have an agreement. Arizona statutes say that there should be an annual agreement with the self-managed property management company. Thoughts? So I am a little confused what your question is. So if you're self-managed, right, which means that the board manages the association. I'm not sure what you mean when you say we do not have an agreement, because the boards should be managing it because you're self-managed, or maybe, I don't know, maybe you have like a property manager on site. I guess if you don't have a contract, what the implications on there are that they can leave anytime, you can fire them at any time. It would be best to have an agreement in writing documenting the employment relationship. But if you don't, many associations don't. If they have an individual manager that's like working for the association, I'm not aware of anything that says that there has to be an annual agreement on that. So hope that answers your question. Okay, question 27. We have 4 questions to go. Can the board require homeowners to be insured for their private property? And if the governing documents permit fines, fine the owners for non-compliance. So in order to fine, there has to be a violation of the association documents, the CC&Rs, bylaws, or rules. I mean, I've never seen an association fine for not having insurance. I suppose literally if it's in your documents that the homeowners are required to have this insurance and that the board, they're required to provide us a proof, I would say, and get the result that you want, you may have to sue them in order to get them to carry the insurance. Okay, next question, number 28. Our management composites of dues or fees that they collect throughout each month to our operating account. As treasurer, can I request that they give me an itemized breakdown of what each deposit consists of, every individual amount and unit number that has contributed to the total of each batch deposit amount? I think that's a valid request. See what they say. And if they say, no, we can't do that, then say, well, what can you give me that will give me comfort so that I can better understand this deposit amount, what it is, how it is divided up. Okay, question number 29. What statements are needed in the HOA CC&Rs to best protect a large reserve fund balance? That's like that all board members are listed on the reserve account and that, a majority vote of the board is needed to remove any funds from the reserve account, I think would be all good things to put in place. You could also do it. You put it in the CC&R so it would apply to every board, future board going forward. The board could also adopt a policy if you don't want to do an amendment because it's too expensive or you don't think you can get the votes. That board could adopt a policy. Of course, future boards could unadopt that policy, but that might be another way to handle it without a vote of membership. Okay, last 2 questions. If an association is successful in obtaining a loan against the HOA to replace or repair roofs that they are currently responsible for, can individual homeowners be held responsible should there be a default? Traditionally, no. Usually the collateral on HOA or condo loans is future assessments. The bank can take future assessments if they don't meet the obligations under the loan. Also, would a homeowner who puts their home up for sale, would they be required to disclose the amount of the loan? Does it show on a title report? I don't know if it shows on a title report. It would be a lien on the property. It's possible it might. And I think I would ask your realtor if you think that's something that needs to be disclosed or not. Okay, question number 31. I'm currently the only board member for our community. Is that a problem? I would say yes. You likely, I don't know, I haven't seen your documents, but I'm guessing maybe you have a small board, like 3. You really need to have more than one person to have a quorum. Unless your documents are set up where it's one person can make decisions for your entire community. That would be very rare. So my best advice to you would be reach out to your attorney, talk about this issue, look at the number of board members you're supposed to have, and maybe come up with a strategy with the attorney to try to get more board members. Okay, we have many learning opportunities in April. So we're finished with our questions, moving on to, what's going on in April here. We're 3/4 of the way through March, but April is going to be a very busy learning month in our firm. And so just some future classes that we're going to be teaching in April. So we're going to have our virtual First Friday event, which we always have, where you can ask questions and we answer them at no charge. And that First Friday class will be Friday, April 4th at 9 a.m. Then we have class number 4 of our 2025 virtual HOA Academy. That is going to be the 3rd Tuesday of the month, just like always, Tuesday, April 15th, tax day at 11 a.m. And we're going to be talking about vendor relations from hiring to firing. And we're going to be talking about management companies and landscaping companies, how to deal with problems, how to hire a vendor for a large capital improvement project. Vendors. We're going to be analyzing it and giving you the best advice possible so that you can have good relationships with your vendors. And if it's not working out, what are some ways that you can get out of it? We also are going to be teaching some classes for the city of Chandler by virtual classes. And we have a couple of virtual classes coming up in April. And it's called the City of Chandler HOA Academy mini-series. It's going to be on Wednesdays in April at 4:00 p.m. via Zoom. And it's going to be April 2nd, 9th, 16th, and 23rd. You can go to our website to find out what the topics are for that Chandler HOA Academy mini-series. I'm pretty sure that they're encouraging Chandler residents to attend, but anybody else who wants to attend certainly is welcome to attend. Last but not least, please, if you wouldn't mind, consider leaving our firm a Google review or a Yelp review. We're going to be sharing a link right now in the chat on how to leave a review. We are always happy to get feedback from our valued customers and attendees at these classes so that we can continue to improve the programming for the classes. And if you like the classes, it's really important that you let us know through these reviews, because we will pass those on to the different neighborhood services that are requesting us to teach these classes, because we're always at risk that maybe at some point these different neighborhood services departments decide to go in a different direction and not have virtual classes anymore. And I think we can tell from the attendance here today that these classes are very valuable to a lot of people. And the best way for us to pass that along to them is to have you do a review on Google or Yelp. And like I said, we shared our review links with you, and we would genuinely appreciate it if you would do that for us. I hope everybody has a great rest of March. A lot of people on spring break, I know, and a lot of snowbirds in Arizona right now. Thank you so much for being with us here today, and we look forward to all of our teaching opportunities. Looks like we have about 6 in the month of April. Hope to see you at one of those events or more of the events. Take care, everybody. Have a good rest of March. Bye.
Don't forget, our free cheat sheets are available for download at mulcahylawfirm.com.
The intent of our Zoom, Facebook Live, First Friday free call-in, videos, and podcast is to provide a forum for board members and community managers to receive answers to HOA and condo legal questions. Please note, the content in these sessions are general in nature and is not intended to and should not be relied upon or construed as legal opinion or legal advice regarding any specific issue or factual circumstance. You should directly consult with an attorney for advice regarding your individual situation.